Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek. We've got lots of green on the board here this morning in grain and livestock futures trade. And obviously in the cattle, Scott, we hope that it holds and that maybe the low is getting close anyways.
Yeah, there's that word hope again in the
Yeah.
cattle. Thanks for having me, but it's been such a wild ride and a lot of fingers being pointed and questions trying to be answered on why it had happened so fast. And, a market that started that, yeah, we got record highs and probably got too high and maybe needed a correction, but then started to snowball from there. So when markets break, there's a lot of rumbling from cattle producers trying to figure out why. You try to look at the fundamentals, and there wasn't a fundamental change that changed it probably in this tune. So you try to figure out what are the other stories that are happening. We've talked about the LRP squeeze, the subsidy harvesting that's been happening, and some of the pressure that margin calls had on short options. And then you hear a report from on Wednesday that there indeed was possibly an insurance company that wasn't covered on some live cattle contracts. So all of that noise, kind of makes a little bit of sense when you have a market that's in free fall and somebody's having to puke this market, somebody's having to exit, and all makes a little bit of sense if you kind of add that together. And now you're going to look at some carcass weights that's also going to be thrown in there. Those negative stories just get highlighted and magnified when you're really trying to figure out why a market's breaking so fast. And yes, to those carcass weights were record weights again here coming out yesterday, and we've got great weather. We've got cheaper feed, so that's continuing to happen. You've got a producer that's now fighting the market, and the North cash is probably going to struggle versus the South because of that.
All right. So from a technical standpoint, you said that we have broken the uptrend line that you had drawn. So where do you find support now? What are you watching or looking at even in these charts?
Yes, good question. And it gets a little scary, in my opinion, on looking at charts because we've rallied so far. And I've got a nice long uptrend line on my long-term movement chart from the COVID lows all the way to the record highs. And you can put a line across those lows there. And we've taken that out here this week. So it's the technical measurements, when you start to measure from that, get a little scary. So when you read some of these articles, I've started to see these numbers pop around from maybe somebody that's more bearish. They're going to shout these kind of retracement numbers from the top of the trees because they're, we've rallied from 80 to $1.90. So do some math. I mean, we've got a halfway retracement of 134.60. That's a number that's not even in our brain yet. So there is, going to be some of those numbers toted. It's going to depend if fundamentals are going to want to come through at the end or not. We've got a market run by high frequency traders right now. Currently, you have 80,000 volume yesterday, and open interest only changes by 411 contracts. So you've got a market that's spinning so wild with the algorithms and the high frequency traders right now. You have a long that's pretty scared to try to buy this market because it's moving so fast. I don't think anybody has any interest in the sustaining power, at least not through the end of the year. I don't think we're going to expect a bunch of funds to want to jump in and take a long position with them through year end. For a lot of traders, maybe it's been a good year. They're going to try to protect some profits. Some of those funds might want to protect their profits, make sure they show their positive number at the end of the year, turn the calendar, and then here we go again. And it'll be the fundamentals later that's going to have to bail us out, because I do think we've moved all these feeder calves so early with these large placements that have happened in the last few cattle on feed reports. When we turn the calendar into next year, I think guys are going to want to fill some pens, are going to find out that these cash feeders are probably going to lead us out of here, because I think the numbers are going to be tight. We're going to be there. We're still, increasing this female slaughter and don't have the long-term rebuild happening yet. So when does that kick in? Good question. I really wish I had the answer on how far we had to correct here.
Yeah. And what do the crush margins look like, kids? You've had this big break in the feeders, and corn is substantially lower than a year ago. And I know we've had a break in live cattle, but not as much as feeders. So what is it looking like?
The board kind of is evident that the feeders have broke, so much more, but the cash is tougher.
Okay.
You try to ask somebody what a 900-pound steer's worth, and you're gonna get a wide range on what people think that's worth. So I think it's wise to be shopping. You want to have your break evens and your pencil ready, because I think you can find some deals here, and then the next one is it's going to set some pretty high marks. So you got to keep shopping, and that's what's making it a little tough, because you hear about some yearlings that are selling, whoever paid for those, that they're a lot more bullish than I am, and then the next few groups, hey, you find some that actually make $100 a head. So there's quite a variety of prices in the sale barn, a big variance, I guess, in price structure there, because there's a lot of uncertainty on what that's worth. And country deals are tough to make as well, because you get a producer that's asking a high price, and now a feedlot that's saying, hey, I'm going to lowball this because I need to make sure that this works for me. So maybe slowing down some of those country deals here.
Yeah. All right. The hog market, we're up a little bit here today, maybe a little short covering bounce, but when we get these, they're not very long lived, because we just have too many numbers up front here, and the cash market just continues to not be able to catch.
That's what it looks like to me. I mean, this large supply that we've talked about for, feels like months now, and I guess it has been months since we've probably been looking at the numbers that we have and all the barns being full, and now we've got struggling to get hogs in. You've got some canceled lows, you got some hogs looking for a slaughterhouse, looking for a home. You've got discounts on hogs over 300 pounds, so we've got some big weights. The carcass weights have been evident that we're seeing that, every week we're higher yet again, and now hearing about some discounts, and struggling to try to find a home for some of these hogs. So this is going to drag on for a little while here as we try to get some of these hogs cleaned up, and hopefully that chain speed can keep moving. We need that demand to be there for those hogs, because we're going to have a pretty big supply coming at us here for a while.
Yeah. All right, let's talk about the grain trade. Everything is up this morning, but we did get export business on corn, soybeans, and wheat, and probably all of it is China at this point. But how far can corn run with this renewed demand, do you think?
Yeah, corn is just kind of in the back seat in the grains here, and
it's still a follower, right?
It's still a follower, is right, and it's in the good news is we kind of broke out of the bottom of that range, able to crawl back into the range, and now we're getting back to the top side here. And it was demand that needed to happen to kind of lift up all of these grains, because we had such a dismal harvest low kind of driven in a lot of these markets, and it was waiting on a demand story to kind of bail us out, and we're starting to see that. So that's good news that we're moving some of this. That's what's going to have to happen. We've had enough of the negative news in, and now we can kind of turn the page and say, hey, we've got some demand kicking in, and had the cheapest wheat in the world, and found some home for some of that, put a nice sharp rally there. So able to lift them a little bit. I wish I could stand up and say we're going to move a lot higher. I think beans probably have the best chance for a rally, because they have the demand story that's kind of kicking in, and you can throw a little South American weather on that as well.
Yeah. But what kind of a cut would we have to see yet in Brazilian production to be able to get back over the $14 mark here on soybeans? Because we've already had some private estimates that have cut production. CONAB did yesterday as well.
Yep, they're cutting production. They're still adding acres, so we know that there's still going to be more acres down there, so it's going to have to be significant. But when you're in the moment, in the weather market, and that uncertainty in weather, I think that always just kind of trumps a little bit of the numbers here. Once we kind of get into the spring or closer to the harvest for those guys, then I'm going to be a little bit nervous, knowing that there's increased acres there. But as of now, we had some more negative weather, I guess. We had some rains around, but it's less than expected, I guess, is what the market's trying to say. And I think that's a general rule. I don't remember any year that we had just a perfect weather pattern. So I still think we're too early in the growing season here yet to really digest what the weather's looking like. So there's still some of that uncertainty there, and that's what's going to drive this market from the lows here.
No, I'd agree with that. All right, thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.